Hello stock traders, I hope all of you survived today. This was a very rough day, and in today's video I'm going to talk about what my plan is, the different things that I think about when we see a massive sell-off like we had today, and I am planning for the market. If it should sell off, I have a plan in place, and I'm going to share that all with you today. One favor I ask of you is if you can please hit that most amazing and wonderful like button. Also, if you haven't done so before, please subscribe and turn on those bell notifications so you get notified when a new video comes out. Now, I am a stock trader who has years and years of experience of trading on the open stock market. And I apologize in advance about the quality of this video, but I am traveling today and I am not able to make my normal video that I normally would, but it was so important that I get to all of you and talk about how I attack a bear market in what we could see today. Now, tomorrow we have major data coming out. We have the payroll data, and so this could send the market further down, and we could even fill this gap down here in a hurry down to 370. I do think that's possible. Right now we cut, as you can see by this candle, we cut straight through this 200-day SMA line. Now that is the line when we are above it on the S&P 500. I am bullish. I'm looking to buy stocks that fit my strategies that are bullish and put the most weight into what is bullish. So today is really we've been kind of popping back and forth here, and we need to see a bounce to continue that activity. Now, I like to trade insider activity because it is the news before the news. Not only is significant insider buying essential for when the market will move up, but also if there is heavy insider selling, I like to go short on stocks with extremely heavy insider selling. Both strategies I use in conjunction with one another as a hedge. When we have a day like today, this helps to protect my portfolio. Now, there were 6 stocks this morning that I called out that I thought were going to go up, and only 2 of them had a positive return, and we had 4 that did rather awful. I have 10 short positions that I was in, roughly around 30% of my portfolio. Those did extremely well today, obviously with the market being so far down. So I want to talk about if we get data tomorrow. Data releases tomorrow morning at 8:30 a.m. Eastern time. And so I will be watching closely to see how the market reacts to that data. If I see further sell-offs, I am probably not going to trade the entire day. I'm not going to buy any new stock if we get a sell-off. I'm not going to buy any stocks that I'm bullish on. However, I'm going to hold all of those bearish positions open if indeed we should see that. Okay, and some things that I look at, I always look at the VIX. When we start to see sell-offs here, I look for an elevated VIX. You can see over here, I have the VIX highlighted here. And in today's price action, and today, by when I'm referring by today, I'm talking about Thursday's market day. This is right after market after Thursday. And it climbed 18.32%, but it's only to $22.61. So I want to go to the VIX, and I want to tell you what my plan is in a major sell-off. So I just kind of embrace it. You know, we haven't had a major sell-off. We haven't seen a VIX spike since March of 2022, and so I will be watching that. And what spike level do I look for? So here we have the weekly chart of the VIX, and you can see here this is March 2020, and it has been pretty calm. You can see I have alerts set up. I don't know if you can see this. The first level is at 24. That is when we start thinking there's some major fear building in the stock market. So we're still at 22. There is not a waterfall of selling by any means yet. And every bear market tends to end with a spike to 46. And so I have the levels to pay attention to are 24, 29, 37, And then way up here, you can't really see it, 46. 46, the VIX hits 46 0.2% of the time. It never holds. And so let's go back to March of 2020. We had massive panic as everyone thought, the coronavirus was going to kill everybody. And in fact, this is the highest I ever remember seeing it at 85. It was crazy how high it went. This is the weekly chart here. And so you can see how high it got up here. Now, when the VIX hits 46, here is my plan. So if this should happen, if we continue to see a major sell-off, now I am hoping that does not happen. I, of course, want the market always to go up. But in the past, I have always made 100% plus gains by taking advantage of the VIX spiking. Now, you might be asking yourself, how do I do that? Here's how you do it. There is a ticker symbol called SVIX, and if the VIX hits 46, I am looking to buy SVIX, and you can see it got creamed today all the way down to 1651. Now, if the VIX hits 46, most likely this will be down around $8, $7. It might even get to $3 or $4, so it'll come way down in price. And so I will buy this up once it hits 46. Why? Because the VIX never holds 46, typically for even a week. You can see how volatile it is when you get to it. So let's go back to that. And you can see here that when it climbed up here, it was there not very long and it got crushed. Look at it get crushed downwards. So if you would have bought SVIX, which it wasn't a stock at that time. I did it differently this time at the time when this happened, and I think I did it by actually just shorting the VIX once we got way up here. I was buying TVIX, which doesn't exist anymore, and I rode it from $50 all the way up to right around 900, and then I got out of it. It was a fantastic trade. So I rode the VIX up, but then Mr. Powell got on there and said zero interest rates were the way that we were going to go. I knew a massive market change was probably going to happen because even though no one was working, that would turn the market and turn it around. And indeed, I was right. And went very, very bullish into stocks on this. But moving forward this time, with the VIX going up, I'm going to hold my short positions until it spikes to 46. Hopefully that doesn't happen again. But once it does, and we get above 46, you can see it just really doesn't hold. It was here just not even very long, and we got it pounded back down to the downside. All right, let's see if we can go all the way back and see other times in history when this has really moved up. Here's a spike back in 2015. Boy, I remember this spike. Golly, this was terrible. So it got above 46, not even 1 week, and it was all the way back down. Look at that. So it just doesn't hold 46. This is a perfect opportunity to buy SVIX and to move and hold it until it gets below 24 again, because you can usually see it doesn't take long for it to get below 24. This is easy money to make in the stock market. So if you're prepared and you can take advantage of this. So here is 2011. It got above 46. Again, just for a moment, and then this thing came back, crashing back down, all the way down to 13, really not very long. That's kind of crazy. Here's another spike here. This was back in 2010, and so again, you can see it doesn't hold. And so buying that SVIX is going to be beautiful if it should happen. Now, this is 2008. This is October 2008. This one would have taken a lot of conviction, but man, it climbed all the way to 89. That was really tough. That was right when Lehman Brothers was going out of business. There was everything with, of course, the Great Short and so on and so forth. That's been made so famous. But you can see here again, it didn't hold. Eventually, it came back down. So buying the SVIX, you know, if the SVIX was a thing during this time, you know, I probably would have gone in on it here, and then as it spiked up, I would have done more, and then if it continued up, I would have done more. I would have averaged in here, you know, adding as that can go. So these are some things to kind of think of, and hopefully this was helpful to you, and kind of can at least give you something to think about. That if we should see a spike in the VIX, hey, there's a plan. That one Ray guy, he talked about what to do on this, how he was attacking it. So tomorrow morning, just to be clear, my plan is not to buy stock unless the stock market starts moving up, and then after the payroll data is out, then I will start to buy stocks that fit my strategies. Always buy a stock that fits your strategies. Always have a plan. Have a strategy, have reasons for entry into a stock, reasons for exit out of the stock. My most famous, or the one that I use the most, is my insider swing play. I use that each and every day. I'm trading stocks with insider activity. Typically, whether I am shorting stock that have insider selling or buying stock that have insider buying, I do most of it insider buying. Mostly I am bullish on the market, but these days has me thinking otherwise. I got creamed in my portfolio today, but you know, it could have been a lot worse if I wouldn't have had short positions, and so that's why it's so important to have multiple strategies. I wish you all the best. Please reach out to me in the comment section down below. Sorry this video wasn't of higher quality, but this is what I got, and while I'm on the road, I just have my my little laptop with me, and so I don't have my microphone in my normal studio. Wishing you all the best, and Raythoven out.